Good afternoon. My name is Christian Lowe. I'm the Paris Bureau Chief for Reuters, and I'm going to be moderating this session this afternoon.
C'est quelqu'un d'autre là qui modère. Voilà. Ouais, c'était bien.
We have about 45 minutes.
Tous de la même.
We're going to have a hopefully a spontaneous and interactive discussion, and then we will open up the floor towards the end to get questions from you in the audience. So we're going to be talking about new drivers of the energy transition. When I saw this title, I took it to mean drivers of the transition towards greener, less polluting energy, and I think the panel agree that that's what we're here to talk about. I'm going to start by introducing the panel to you. I'll start on the left. We have Matthew Saville, who's Managing Director of SCOA, which is a joint venture between Caisse de dépôt and the Agence Française de Développement. We have Simon Quiré, who is Project Finance Director for Accruer Energy, who are actually in the front line of implementing renewable projects around the world. So very interesting to hear what it's like on the ground. We have Josine Pic, who is from, she's head of EMEA at GRESB. For those of you who don't know, GRESB is a consultancy which, Josine, correct me if I'm wrong, helps investors understand if a project or an asset is environmentally sustainable. And finally, just to my left, we have Carl Nietveld, who's head of research for global infrastructure energy ratings at S&P Global. He needs no further introduction, as you all know what S&P does. So, let's get started. I'm going to start by asking the panel a slightly provocative question. So, we all think that the Earth should be greener and energy should be less polluting. But those are ideals. How does that actually translate into reality? Because when we're talking about energy infrastructure projects, we're talking about millions and sometimes billions of euros. People are focused on the bottom line. So how do you convert ideals into hard-headed investment decisions when we're talking about renewable energy? I'm going to go to Josine and get her views on that.
Oh, well. Well, you started off introducing us as a consultancy, but I would not call GRESB a consultancy. We're a by the industry for the industry initiative, and we were set up by large institutional investors 10 years ago in real estate and now 4 years ago in infrastructure. And these very large asset owners want to have better data on the sustainability of their investments. These are long-term, lumpy, illiquid investments for these large investors, and they really want to make sure that they have better data on that. And we are just the blue-collar workers making sure that that data is there so that they can make the better decisions. So what we at GRESB really believe in, that there are these material relationships in our financial world. And if you inform these material relationships with good data, better decisions can be made.
Carl, is it an idealistic thing to invest in renewable energy, or is it a hard-headed business decision?
It may have been idealistic in the early 2000s when I used to be a utility analyst and my Swedish colleagues told me about CO2. But today it's a fact now. Renewables are as competitive and actually more competitive in quite a number of markets than thermal and traditional generation sources. So I would definitely say that all the momentum is only accelerating, especially since the last 2 years costs have come further down and projections are for solar and wind costs to further decrease by 2030. So all of that means that it's not just the power industry. The sustainability encompasses all sectors, and I think that's an important message. Power is only 42% of global emissions, but when we talk about sustainability, we have to look at all sectors. I can go into details if you want.
What I want to ask you is, if we're talking, for the moment, let's deal with the European context. How is regulation driving this transition, and how fast is it happening? Is it accelerating?
So yes, if you think about growth in renewables and sustainability, first of all, it's a societal movement. Society translates often in legislation. It's also a question of competitiveness, as I said, but just focusing on the legislative part, which is not the only driver to start with, you have it on all fronts. If you take, of course, the most well-known objectives have to do with the car industry, where by the end of 2020, emissions have to come down by another 20 gram per kilometer vehicle. So that is a huge challenge for the auto industry, but I think we need to be seeing much broader. The airline industry is going to face other legislation to cap emissions. Given the airline growth of 4+% per annum, that can only be possible if there is technological breakthroughs. If you go to oil and gas, you see every oil and gas company we meet today, they are focused on methane emissions, stop to flaring. And you can go on and on and on. And I think ultimately it's even beyond those sectors that are big polluters, if I may say. It touches every sector, including food distributors here in France, Auchan, for who it is also a brand and a corporate responsibility.
Yeah, okay. I wanted to touch, in this context, to touch on Africa. So Matthew is actively involved in investing there. It was a surprise to me to learn that renewables are significantly cheaper than conventional sources. Yeah. Can you give us some specific examples about that?
So at STOA, which is an equity investor in emerging markets in energy and infrastructure, for a long time now, we've been, renewables have reached grid parity and gone further than that. So we really are looking at competitive solutions in the markets that we work in. These are high growth markets with space to put renewables on the grid. The problems that we see there are actually linked to the limitations of these grids and capacity building within the institutions that we work with. But it is a good, we can get the financial return that we want on renewables now, even if prices have gone down so far that it can be challenging. But it's more, they've got so competitive that, and it's become nearly a commodity in certain markets. Okay,
so clearly how projects are financed is an important factor, and where the finance comes from. Simon, you've been involved in a lot of projects in emerging markets. The way that these things are financed has12 some changes in the last few years. Do you want to expand on that?
Yeah, sure. So first of all, ACCIO is a French IPP. We've been developed for 12 years now renewable energy plants. We've got more than 65 plants in operation all around the world, and we have financed 2.2 billion euro, meaning 1.5 gigawatt in operation. So, yes, first of all, I would say the main driver is the competitive price of this energy. This is done. Imagine this sector has been just more than 10 years. It's a really new sector, ecosystem new sector. And in 10 years, we could get a more competitive energy price all around the world, even in Europe, in Western Europe. So this is the main driver, but that's true. The second driver is legal things, because we need to get, for this competition, to get a very long contract between 10 and 20 years. So we can talk later about that. But regarding emerging market, yeah, some change just happened recently. The example of Africa is really interesting. In Africa, we've been developed, we just have finished the construction of the biggest PV plant in Mali. We began to discuss with the Mali state 8 years ago. It took 8 years to reach a COD for this project. Why? Because it was the beginning of the sector, for sure, in Africa also, but because of direct agreement takes a very long time to negotiate, And now it totally changed. All the African countries changed the law, and now this is a bidding process. And it means more transparency. And it happened just 3 years ago. South Africa and Morocco were the two first countries to develop this kind of process. And all the countries just follow this process. And this is the main driver of Africa developing energy renewable. And this is a very main issue, because now meaning transparency, meaning bankability, and meaning more equity more equity funds to finance our project. And so this is really important, and it really changed 2 or 3 years ago, because just to give you some figures, but it's interesting, it goes so fast. But imagine 3 years ago, there were only a few plants in operation just in South Africa and Morocco. Now Senegal began, Mali, Ethiopia, Kenya, so it really happened just recently.
Okay. I think that example is very interesting, because sometimes in the industries that we work in, you need the bilateral agreements, the bilateral approach which Accio had in Mali before going to the big auction processes. And so I think that Mali example, and then now the auctions coming on in Africa, both are needed.
Okay. Josine, what's your view on the big drivers behind this transition?
Well, yeah, I see a number of drivers. I'm very focused on the institutional investors, and arguably they're not yet so active in Africa. Yeah. So that's one of the, I mean, we're knowledgeable of that. They are looking, but they're still, you know, like one institutional investor in Denmark said, you know, we're now venturing in the Nordics, so he's still got a long way to go before he goes to Africa. But okay, they are very intent on getting better knowledge and data and intelligence on sustainability. Mm-hmm. So they're driving that clearly there. Society and the social license to operate goes hand in hand, so that's much broader. The debt providers are getting more and more interested in getting better data. They have it less easy than the equity providers, who can actually, you know, make these guys report. The debt providers are a bit more, you know, have less clout basically. But if they team up, they can probably get more data. And of course, the regulator. Let's not forget our great European Commission, who is it's still forming itself, but this new Commission looks to have a very clear intent on sustainability and regulation, and using that, interestingly enough, in a much more collaborative fashion, where you see China being very much top-down and America being completely bottom-up. Europe is of doing things, you know, in a mixed way. So it's fascinating to see how these elements work through but you know, clearly the focus or the direction is sustainability.
Yeah. Okay. So we've talked about the factors that are driving this transition. I also want to spend some time about, I guess, what you describe as the obstacles, or more optimistically, the challenges in the way of that transition. Can we start with technology? So any shift to renewables changes the nature, the rhythm in which power is supplied, because renewables can fluctuate. We're only heading towards more renewables. That's apparently the trend. So how do we provide a sort of base load of reliable electricity, and how do we store power? Who wants to come in on that?
Well, it's... sorry.
No, I'll let you go.
Matthew, go on. Mm-hmm. Matthew, start.
It's true that, I mean, storage is definitely, I think, in all markets, but for different reasons, something that we really have to look at. And actually, we more than have to. I mean, it's a great opportunity. There are different models, and when you look at storage, you have, of course, frequency management, you have power shifting, you have different ways of using storage, and different applications in function of the grid and the level of development of the country that you're looking at. So I think storage is something that, on the financing side, the equity and the debt side, we've really got to get our heads around and start doing more of.
Carl, you wanted to come in?
Yeah, I mean, storage is, of course, the ultimate solution, and once storage is competitive on a wholesale basis, it will be the absolute breakthrough for renewables. But that may be still a decade or more away. So what we are focusing on is how do you transition. The intermittency of renewables really raises a question on grid stability. So the question there is, how do you make sure that once your generation mix is 50% renewables, as long as it is 20, 30%, yes, you can run the grid, there is sufficient capacities around that can step in. But if you go to 50%, or like in Spain, we project more than 70% renewables in 2030, then you need to have a full package to cover this. There are multiple ways how you can manage that by making the grid smarter, meaning digitalization of the grid so that any operator knows when renewables or others come online. Forecasting ability is linked, of course, to that. If you go to Red Electrica in Spain, they have a separate center for renewables where they project all the renewable capacities next hour, next day, so that they can really plan towards that. So there is the question of digitalization that will be very important, smart grids, not only at the production level, over time as well at the consumer level. Mm-hmm. There will be interruptibility will become a bigger role. Industries will have to adapt to that. Of course, the other near-term solutions is going to be a power system that's going to be more tilted towards capacity payments to keep certain capacities online to make sure they can step in. I think, again, Spain has the benefit there of having built huge amounts of combined cycle gas turbines over the last 10 years. They only run at 15, 20% of capacity today, but in a system where renewables get doubled in the Iberian Peninsula, those combined cycles can have a huge benefit. The question is, of course, someone has to remunerate them, because running at 15% of capacity may not be a profitable investment. So that is, of course, a very important part. And, of course, hydro is the most obvious source. That's why I think in the world, you only see really 100% renewable systems where you have huge amounts of hydro. Yeah. Otherwise, I think it will be a challenge, and I think that's my last word. If you go above 50%, we need to see that technological progress happening without assuming that a grid can be completely managed at 70, 80% of renewables. Yeah.
So we need technological progress, but there are cases, concrete cases already where storage is being used effectively, and it's commercial. Simon, you had a case that your company's involved in.
I just wanted to talk about storage because, from my point of view, storage doesn't make sense in Europe, because in Europe you've got good stability of the grid. So storage really makes sense for developing countries, and especially for where there is no stability of the grid. And we can take the example, the very nice example of the French states, what they have done for the tender. They have obliged all the IPP like ACU for island countries, in French island countries, to respond to the tender with a storage solution. Instead of because island Réunion, for example, is 40% mixed energy with renewable energy, and with 40% in island, it's becoming complicated. So you need to make storage to get the stability of the grid, and it happened 5 years ago. So and we have developed a 40 megawatt storage PV plant. 4 years ago, it was the biggest in the world. Things goes very, very fast, because 40 megawatt now it looks very small, but 4 years ago it was the biggest in the world. And we have financed this project with the same kind of structural financial than a PV plant, a normal PV plant. Yeah. So 4 years ago, banks follow. Debt senior banks follow and made the same kind of pricing than a solar plant. So and I would say at the end that storage is the driver of the storage is, of course, the cost of the storage. And now it's becoming competitive in some developing countries. So this is really the beginning of a new driver for these countries.
Okay. To stay with the technology, because I find this fascinating. So there are hybrid, in emerging countries, there are hybrid ways of providing a baseload, which is this fascinating mixture between the really new and the old.
Yeah.
Can you tell us about that?
Definitely. I think the hybrid solutions that we see the most of, going back to Africa again, I mean, things are happening elsewhere, but in Africa, combining diesel, which is what is used in a lot of countries now for base load, with solar, is a hybrid solution which is cost efficient and does bring this new technology to the grid. In India, they are looking at combining solar and wind to put hybrid solutions on the grid that I wouldn't say are base load, but close to base load. So I think if you combine different types of energy, conventional or renewable and renewable, you can put together solutions which are of interest.
Josine, from your perspective, so we're talking about this transition. What's the biggest obstacle in the path of this transition that you can see?
That's not so much an obstacle. It is just a bit of caution that we don't get overly focused just on carbon and on greenhouse gas emissions, that we see already the environmental impact of what we do in a broader sense. So take water, take biodiversity, and then, of course, also not forget the much softer but very important social aspects, so that what we do needs to remain human-centric. You know, that's the big learning curve we're actually on. And it's much more difficult to quantify. I mean, there are some quantifications that can be done, but in the end, we do want to live in a human-centric, sustainable world. So it's that broadening out of our scope as well.
Okay, and also I'm mindful of the fact that we've been talking mostly about energy generation, but there's also the downstream consumer side of this. So there are targets set by governments to reduce energy consumption, increase the energy efficiency of buildings. Is that going to be a big factor, do you think?
Yeah, well, buildings is our other. So at GRESB, we actually look only at two real asset classes. So we look at buildings. We've been doing that for 10 years, and infrastructure now for 4 years. And it's absolutely true that seeing a massive industry coming together and transitioning together is a really beautiful sight. It's beautiful to see how giving back data, and especially a sort of healthy sense of competition, giving that back to the industry, really galvanizes people's views and makes them do the right thing much faster than we would have ever anticipated. With real estate right now, we have the problem that everybody has migrated to the right-hand top corner, and we really have to massively lift the bar to keep the game interesting. Mm-hmm. So it's, and we have now over 4.5 trillion of assets already in one place, uploaded in one place. So that's a large chunk of the industry coming together in this virtuous way. Yeah.
Carl, still on the challenges. So, and coming back to the situation in Europe or developed economies as a whole. So we see a situation where subsidies are falling. The expectations of regulators are going up, which creates a difficult environment a challenging environment for investors.
Yes, so I think one of the big challenges for renewables is how you finance them. The famous question we always get, can a renewable project be investment grade? The simple answer is no. But let me tell you why. Because intrinsically, while we're all very pro-nuclear, and once a nuclear plant is up and running, it has zero marginal cost, so it's a very competitive source of production, it is intrinsically a very risky investment, because all the capital costs are upfront, and afterwards, if you don't have support from contractual or legislative elements, you can be exposed to a market which is extremely unpredictable. So we can forecast oil prices 10, 15, 20 years, have some degree of where we see a floor. On electricity, things are much more difficult. The more renewables you build, the more there is downward pressure on pricing, because it's a marginal cost. In the US, prices dropped from $60 per megawatt hour to slightly above 30 over less than 10 years. I'm not saying that renewables is the only driver, there gas as well, of course, but I'm just saying that we have to be careful not to simplify the equation and say renewables, it clearly is very positive from society, environmental, but there is a very big challenge in terms of making sure the risks are manageable by the investors, by the banks, by the capital markets. The three areas that we would say can mitigate those risks. First of all, we think some floor mechanisms for financiers are important. We had the Spanish auctions that became merchant, so exposed to the Spanish pool price. But there is an intrinsic floor in that mechanism that at least gives you 32 euros per megawatt hour, depending on, of course, the type of project that was launched there. It gives a floor for banks to have predictability on. The second one, of course, is the corporate PPAs. So corporate contracts are going to become much more important. They have been very important in the US. And we see now much more interest in this area. The question will be, how do we bring this up in terms of volumes? There is a lot of appetite from many sources, but one needs to structure it in a way that someone has to take the risk. This is a resource that is not predictable in volumes. So we need to bear in mind that there is huge intraday volatility in the power price. So even if you are to predict the resource on average, you cannot predict when you're going to produce, when the wind is going to be there. And on top of that, the more wind there is going to be, probably the lower the pool price is going to be. So to transfer that risk, the producer probably does not want to take that intraday price risk or the timing he produces. The off-taker doesn't want to do it. Someone will have to take it. And this is currently the debate, how contracts are being structured, by having this part outsourced to utilities, to traders who can take that balancing risk. But this is a very big complexity that we should not underestimate. So I'm going to stop there. Of course, the portfolio effect is the last area why you can reduce risk. The more projects you bundle, the more smoother the output is. The more projects you have in terms of bundling the clients, the lower the counterparty risk is as well. But there is certainly a way to go.
Okay. I'm shortly going to open this discussion up to take questions from the floor. But just before I do that, you mentioned corporate contracts. They also play a role in emerging economies. So if maybe Mathieu or Simon would like to talk a little bit about the role they play. Why are they good? Why are they better than the contracts with governments? Well,
first regarding corporate PPA, it's very interesting because we have signed the first one in US 4 years ago with Walmart, for example, with a wind plant that we developed in Texas. But that's right, in Europe, it's really the beginning. I don't know why, but corporates make longer to sign than in US. I know why they are so different, because the grid is not the same in US than in Europe. So in Europe, it's more, there is more stability. So, but I think corporates now need to take responsibility. They need to engage and more than to make marketing, to be able to get a 10 years long contract PPA with some developer, with some IPPs. It is important because it's going to be the driver of renewable business in Europe, for sure. And I would say also that regarding the emerging markets, what we see at this time is that the CNI market is really booming. It is a beginning. CNI market, it is market from commercial and industrial, and these industrials for developing countries, they are beginning to sign off-grid contract with IPP like AQO. So we sign a contract and we develop a plant just behind the industry, just behind the factory. And it goes very faster. Just to give you an example, we have signed this kind of contract with a very large company in Republic and Dominic. 2 months ago, it took 3 weeks to sign instead of 5 or 6 years with the state. And so it's going to be a really good driver for renewable. And why? Because it is less expensive, it is more competitive than other energy producing. So it is always the same. But exactly with the CNI, it's going to be a really huge market and very growing and a short market to sign.
Okay.
Yeah, I think CNI is definitely something which is of great interest in our markets. You see sophisticated markets like Mexico, when I'm talking about developing and emerging markets, which are able to do the intermediate, the pooling of PPAs and structure things like that. But you've also got single PPA, corporate PPA projects, industrial size going on in Africa. And so people are able to structure that without pooling PPAs. And that is great for places where the grid doesn't reach the totality of the population. And so it's an off-grid solution of great interest, like lots of other off-grid solutions that are happening at the moment, solar home systems, mini-grids. These are other drivers of the energy transition.
Okay. Josine, what are your thoughts? I mean, I guess what I'm curious about is what's the best way of balancing the risks and rewards so that the move towards renewable energy and less polluting energy continues?
Yeah, that's a difficult question for me because what we do, we really concentrate on the sustainability data. So we see the column of financial data has been built in 100 years and is great, but what we're doing is, arguably that has been built with a Excel spreadsheet type of mentality, everybody being super smart in their own corner. So with regard to sustainability data, we believe that it needs to be done differently. And bringing this data together in one place makes it so much more interesting and so much more powerful. And therefore, what we do is bring that data together and then spit it back out to the market and telling everybody, this is what you're doing, but this is what your direct competitors are already doing. And that really, gets people on board. So between these two worlds, we don't try to make the connection. We leave others there. There's lots of academics who use our database and then try to make that connection. But we don't. The financial we leave to one side. We're mission driven, so we allow ourselves to really be focused on the good quality sustainability data.
Okay, I want to open this up to discussions, to questions. Sorry, from the audience. So please, if you have a question, please make yourself known. I would ask that you introduce yourself and use the microphones that are being handed around. Are there any questions? I see there's a gentleman over there.
Over there.
Microphone is on its way.
Good afternoon. Sorry to make a nuisance of myself, everybody. I seem to be asking questions in every session. My interest is, when you look at the Victorian attitude towards investment, people were prepared to lose their money because there was a local community benefit to it. We're faced with global warming, and we need massive investment, absolutely massive investment. And at some point, people that hold large funds surely have to take into account there is a wider need than their income, and the investment must be made. What's your opinion on that?
Who wants to respond to that? Should we start with Carl and then come on to Josine?
Yeah, sure.
Carl.
Well, I mean, S&P Global is known to be a credit rating agency, but over the last 2 years, most of our transition has been on investing in sustainable analysis as well. So we know GRESB very well, whereas maybe 3-4 years ago I didn't know them, because we see that investors, some have legal mandates like in France to really think beyond the financial returns, but over the medium long term, there are going to be two benchmarks. Now, there's going to be a credit benchmark and there will be a sustainability benchmark. Beyond the energy transition, talking about the broader context of the benefit to society, like you say. So we do see this happening very much. It's hugely accelerating. Last year I was here as part of the sustainability ESG conference as well. And we do see that this is absolutely happening. So we think investors today, more and more, they want to see the credit rating, they want to see the ESG rating. And that is a drive that has really accelerated this year. So on our side as well, we try to merge the two by having analysts also knowledgeable on the ESG parts, able to factor this in because there are financial consequences if you are not a good corporate citizen.
So it's happening, clearly. I guess the question is it happening fast enough to meet the need?
not going to answer that. That's too difficult. But what is really fascinating, so 2 years ago, TCFD, the Task Force for Climate-Related Financial Disclosure, was set up. And to see how many financial institutions are already reporting towards the TCFD. And, you know, the whole mindset of the TCFD is you have two scenarios. Either we go to a 5 to 6 degree world, and what are your physical risks? And please tell me exactly how much that's going to cost you. Or we're actually going to stay within a 1.5 to 2 degree world, and how much is your company and your financials going to be impacted by that massive transition that needs to happen. So it's a fascinating time where there is effectively no more business as usual. And financial institutions, through this tool of the TCFD, are really grappling with that and getting their heads around that. And there is a really long list of institutions now, in a very Victorian sense, disclosing how these two big scenarios are going to work out for their financials. So I'm not giving up yet on the very short timeline that we definitely have.
I would say you're totally right. We have spent more than 3 years to fund. I mean, actually, the issue is to fund equity investors to invest in our project in developing countries. We are talking every day about billions. We invest in renewable energy. We need to say, what does it mean? Regarding the debt and the DFI and all the developing bank that they support us, there is nothing to say. I mean, they support all the development of this project, but the subject is about equity. Equity, there is no enough equity to invest with us in our project in developing countries. It took for us, just to give you an example, 3 years to find an equity partner for a project in Mali, in Africa. It took more than 1 year to find equity in a project in Poland. I could give you some examples. So, just to give you a last number, last year only 200 million euro of equity were invested in all Africa project. This is, of course, it's not enough, and this is really a big subject. It's not debt, it's not DFI, it's not lenders. The subject is equity. And why? Because equity funds are too nervous to go in this kind of country. But they're wrong, because in the past we have proved that being the first is sometimes a good idea, because you make the market, and after you create a market.
I'm going to ask you to hold that thought, because I want to get some more questions.
Just can I please?
Very quickly, please.
We run 600 million, so our impact is going to be modest. But we financed a project last year which represented 30% of electricity production in Cameroon. And it's already been talked about this morning. So I don't get up in the morning for the commercial returns. I get up in the morning for the impact. I just wanted to say
Thank you. Other questions? Would anyone else like to ask a question? No? I needn't have cut you off, Matthew.
I'm going to chip in then with one last comment on that as well. What gives me some hope that the direction is right, the fact that society is turning, we do see it at the corporate levels. Even oil and gas companies are making ESG part of the remuneration of their CEOs. So today, if you take Repsol, you take Shell, in the utility world as well, it's already more and more spread out. Typically 15–20% of their remuneration can be linked to ESG objectives. It's still a small part, but in the oil world that's a big step, and there's so much that needs to be done. I agree that we are still very far away from the 2-degree scenario, that anything that can help to transition it should be accepted and taken on board, whether it's an oil company or a renewable developer.
Okay, we've got a very short amount of time left. I'm going to exploit my position as moderator to ask a question that I'm curious about. In your opinion, will we ever see another new nuclear power plant built in Europe?
Excluding Hinkley Point and the ones that are...
Continental Europe, let's say continental. In the EU.
Yeah. Actually, just this morning I spent a few hours on nuclear research. So on nuclear, this is a very sensitive topic because if you look nuclear from a CO2 perspective, it's absolutely what is needed, and we can't just throw it overboard. You need to look, of course, at the all-in equation, which is also how do we treat and store nuclear waste, what's the social acceptability. So I don't want to take a position, French or the German view, but if you look new build in the US and in Europe, it's not competitive. That, in our view, compared to renewables. If you have a base load that exists to transition, I think the renewables offer the far better option. In the US, they have more or less stopped with any new nuclear build, 2 projects, major cost overruns. In Europe, we have 3 projects, major cost overruns, all 3. So I don't think this is going to be our expectation to see one in the next 10, 20 years. The only caveat we do want to make, and maybe that's going to be not necessarily a consensual point, is that the existing nuclear, I think we need to be very mindful how we transition in terms of life extensions. Phasing out very rapidly has huge consequences on emissions. And just thinking that, okay, switch off the nuclear plants and let's build renewables. Even with all the renewables we build today, we are so short of the ultimate target that I think during a transitionary period, they can stay complementary and they may require some support, as we see not just in Europe with the French thinking about re-regulating the nuclear fleet to allow for life extensions. In the US, there are a number of initiatives for zero emission credits. Of course, the CO2 regulation is going to be part of it. So I think the existing nuclear fleet, we need to think really twice before we transition too quick away, because there's so much to be done in terms of growth of the renewables.
Josine, you agree we need to hang on to the nuclear capacity that we have for maybe a generation?
Yeah, I'm rather agnostic. I think the financial impediment currently is the major one. I'm also curious to see, I hear, first of all, in the EU taxonomy, it was not taken as green. Now it looks to be added as green, as if I understand correctly. So that's going to be an important financing flow effect if it is classified as green by EU taxonomy. Basically, what we do, we are agnostic. We just make sure that the correct sustainability data is there once the investments are being made. So we don't a priori, exclude anything effectively.
Okay, our time is up. Unless anyone was very anxious to jump in, I'm going to end it there. Thank you all for listening. Thank you very much to the panel for what I thought was a very interesting discussion. Thank you to Matthew Saville, to Simon Quiré, Josine Peak, and Carl Nietveld. Thank you all very much. Thank you.